Okay, so let's dive into last week in blockchain and crypto. That's April 21st to the 28th, 2025.
Right. It was, well, quite a busy one. Lots happening.
Yeah, it felt like a whirlwind. We saw, prices jumping, big institutions making moves.
Regulation still being talked about, and some interesting tech advancements, too.
Exactly. So our aim today is sort of to cut through that noise, find the important signals, give you the insights you need without, getting totally bogged down.
Sounds good. It does feel like a lot of different threads are sort of coming together right now.
Yeah, it's interesting to see how they might connect, right? What it all means.
Absolutely. Where should we start Bitcoin's run?
Yeah, let's jump right in there. Bitcoin pushed past $94,000. What was behind that big climb?
Well, it looks like mostly macroeconomic stuff, actually. Kind of a favorable backdrop.
Oh, interesting. Like what?
There were reports about U.S. China trade tensions easing up a bit. That usually boosts market confidence overall.
Okay, yeah, that makes sense.
And at the same time, the U.S. dollar weakens somewhat. When that happens, dollar-priced assets like Bitcoin can look more attractive to investors outside the U.S.
Right, right. Cheaper for them to buy in.
Exactly.
And then there was the political side, too. President Trump's comments seemed to get some attention. Sounded quite reassuring about the Fed leadership and things like that.
Yeah, that kind of rhetoric, talking down uncertainty in the wider economy.
Yeah.
It helps.
How so, for crypto specifically?
Well, when investors just feel generally more secure about the financial outlook, they tend to be a bit more willing to allocate funds to, let's say, higher risk assets. And crypto often falls into that bucket for many.
Gotcha. So less general worry means more appetite for crypto.
Sort of boils down to that, yeah. And as we often see, when Bitcoin moves up strongly,
Pulls the others along.
pretty much altcoins like Ethereum, XRP, Solana, they all caught a bit of that positive wave.
Okay. So speaking of positive waves and, well, money moving, those spot Bitcoin ETFs, they just keep drawing in cash, don't they?
They really do. Almost $400 million last week. $381.3 million to be precise.
Wow. That's a pretty strong signal from the institutional side.
It absolutely is. It really highlights the growing acceptance. Bitcoin is a legitimate investment for these bigger players.
And ARK21 shares led the pack.
Yeah, they pulled in over $116 million just themselves. Shows continued appetite there.
What's really striking is the timing you mentioned in the source material, these big inflows happening right as Bitcoin hit its highest price since early March.
Exactly. Over $91,740. It really suggests these ETFs are becoming like a major force driving demand now. Not the only one, of course, but significant.
It feels like a shift, doesn't it? From maybe purely speculative to something more mainstream in investment portfolios.
I think that's the potential long-term implication, yeah.
Yeah.
If this institutional buying continues, it could bring more stability, wider adoption. It changes the perception.
And it wasn't just Bitcoin's price benefiting, right? The stocks felt it too.
Oh, yeah. Crypto-related stocks, think Coinbase, MicroStrategy, they saw gains as well. It's that broader ecosystem effect.
A rising tide lifting all the crypto boats, sort of.
You could say that. It signals this wider recognition that there's real opportunity here beyond just holding the coins themselves.
Okay, so with all this positive feeling, money flowing in, it kind of makes sense that we're seeing companies getting active, doing deals, building things.
Exactly. It's like a reinforcing cycle, isn't it?
Yeah.
The ETF participation drives demand, which helps the crypto companies, which further validates the space, and so on.
Which neatly brings us to that point about the Trump administration's stance, or at least the perception of it. Seems like it's fueling actual deal-making in the U.S. crypto world.
Yeah, that's fascinating. It's not just talk. We're seeing, like, tangible effects. Big money changing hands.
The numbers are pretty wild. 21 Capital going public via SPAC, $3.6 billion.
Huge. And then Ripple buying Hidden Road for $1.25 billion.
Plus Kraken picking up NinjaTrader for $1.5 billion. These aren't small tuck-in acquisitions.
Not at all. These are major strategic moves. It points to significant investment, yes, but also consolidation within the U.S. crypto sector. It feels like the environment right now is seen as pretty conducive to growth.
Even if it's not like a blank check endorsement of everything crypto.
Right. It's more about a perceived openness, maybe less regulatory hostility, which encourages these kinds of deals.
And the overall stats for 2025 so far.
Pretty impressive. 88 deals recorded, totaling over $8.2 billion already this year.
Wow. That's a serious amount of capital being put to work. What does that tell us about the industry's maturity?
Well, it suggests it's definitely growing, but also restructuring maybe, becoming more formalized. When you see big acquisitions and public listings like this.
It often brings more scrutiny, more regulation eventually.
Exactly. Which, isn't necessarily a bad thing in the long run. It can add to stability, legitimacy, consumer protection, if done right. It's part of markets maturing. Stronger players emerge. They buy up tech or competitors to scale up.
Okay. So while the U.S. seems perhaps more crypto forward at the moment, the picture is different elsewhere, like the U.K.
Yeah, the UK is an interesting contrast right now. The government there is under pressure to actually provide some clear rules for crypto.
They've talked a big game about being a financial innovation hub, haven't they?
They have. But the actual progress on crypto regulation seems, well, slow.
And that creates problems.
It creates uncertainty. And uncertainty is generally bad for investment and growth. If businesses don't know what the rules are, or if they might change suddenly, they're hesitant to commit.
Makes sense. You wonder if they risk falling behind if other places offer more clarity.
That's the potential risk, yeah. They do have this crypto roadmap from the Financial Conduct Authority, the FCA.
Right, I saw that mentioned, but enforcement is still a way off.
Seems so. The expectation, based on the sources, is effective enforcement isn't really kicking in until late next year.
Late 2026. That feels like an eternity in crypto time.
It really does.
Yeah.
And in that gap, without clear enforceable rules, businesses might just decide to set up somewhere else that has figured things out. It could impact the UK's goal of attracting that innovation.
Yeah, it raises that question, how long can a major financial center wait on this?
It's a balancing act, for sure. Innovation versus protection. But clarity is key.
Okay, shifting gears again. Across the Atlantic, but south this time, El Salvador. They're taking a very different approach, aren't they? Proposing this crypto sandbox to the U.S. SEC.
Yeah, a really proactive move. They want to set up this $10,000 cross-border crypto sandbox.
What's the idea behind that? What are they trying to achieve?
It seems to tie into their whole strategy of integrating Bitcoin and crypto deeper into their financial system. This sandbox looks specifically aimed at cross-border transactions.
Ah, okay. Like testing how crypto can make sending money internationally easier or cheaper? Remittances, maybe?
That seems like a likely focus, yeah. Streamlining those kinds of cross-border financial flows, it's quite bold, proposing this directly to the SEC, especially with all the regulatory debate going on globally.
It really is a stark contrast. Some places moving cautiously, El Salvador just jumping in, wanting to experiment and learn by doing.
Even if it's on a controlled scale, to share that $10,000 limit suggests they want to test carefully. But the intent is clear. Actively explore crypto's potential for real-world financial problems.
It'll be fascinating to see how the SEC responds to that proposal.
Absolutely. A space to watch.
Okay, now let's peek under the hood a bit. Beyond the prices and regulations, there was some important stuff happening with the actual technology, the infrastructure.
Some key building blocks being put in place?
Yeah, we saw LayerZero teaming up with Initia, HashKey joining the graph, Cambrian launching on Say, Pyth's Entropy on Soneium. Lots of names.
It sounds like a lot, but there's a common theme, really. It's all about making the whole blockchain world work better together.
Okay, break that down for us. LayerZero and Initia first. What's that about?
That's about interoperability. Basically, getting different blockchains to talk to each other easily. Right now, they often operate in separate silos.
So LayerZero is trying to build bridges between them.
Essentially, yeah, making cross-chain communication smoother. Think of it like allowing different computer networks to share information seamlessly. It's pretty fundamental if you want value and data to move freely across the whole ecosystem.
Okay, that makes sense. Better roads between the blockchain cities, like you said before, and HashKey joining the graph.
That one's about data access. Blockchains generate tons of data, right? The graph is a project that helps applications easily find and use specific bits of that data.
Like a search engine for blockchain data.
Kind of, yeah, or maybe more like an indexing service. HashKey getting involved helps make that service better, making it easier for decentralized apps or DAT apps to get the accurate information they need to run properly.
Got it. Better data access for developers. What about Cambrian on Say and Pyth Entropy on Soneium?
So Cambrian, launching on the Say blockchain, is focused on DeFi decentralized finance. They're aiming to build more advanced DeFi solutions that are faster, can handle more users, and are just, better to use.
Improving the DeFi experience. And Pyth.
Pyth Network's Entropy going live on Soneium. That's also about data. Specifically real-time data feeds. Think accurate, up-to-the-minute price information for things like stocks or crypto.
Crucial for DeFi, right? You need good price data.
Absolutely critical. If DeFi apps are using inaccurate or delayed data, things can go wrong very quickly. So Pyth aims to provide that reliable real-time data stream directly onto the blockchain for apps to use. Better data means more reliable and sophisticated dApps.
So all these infrastructure pieces, interoperability, data access, better DeFi platforms, reliable data feeds, they're all kind of laying the groundwork for
Right.
a more mature ecosystem?
Exactly. A more functional, interconnected, and user-friendly decentralized web, essentially. These are the less flashy but absolutely vital developments.
Okay, one last piece of news that caught my eye. Coinbase and PayPal stablecoin, PYUSD.
Ah, yes, the free conversion offer.
Right. Coinbase is now letting users convert PYUSD to other cryptos and vice versa for free. What's the strategy there?
It looks like a clear move to boost the use and adoption of PayPal stablecoin. By removing the conversion fees on their platform, Coinbase makes it much easier and cheaper for people to move in and out of PYUSD.
Lowering the friction.
Precisely. If it's seamless to swap PYUSD for Bitcoin or use it in DeFi via Coinbase, people are just more likely to actually hold and use it. It increases its utility within the existing crypto world.
Trying to make PYUSD a more common currency within the ecosystem.
That seems to be the goal, yeah. More circulation, more real-world use cases, which benefits both PayPal and Coinbase, potentially.
So looking back at the week, it really feels like a mix. We had market excitement driven by macro factors and that strong institutional ETF inflow.
Definitely. Significant capital coming in.
Then you have the deal-making, perhaps encouraged by a friendlier U.S. stance, contrasting with the slower regulatory pace in places like the U.K., and El Salvador trying something different entirely.
A real regulatory patchwork still developing.
And underneath it all, that steady drumbeat of infrastructure improvements making blockchains talk, getting data flowing, improving DeFi.
Yeah, the building continues, which is crucial for the long term. It all feels quite interconnected, doesn't it? The market sentiment fuels investment, regulation shapes the boundaries, and the tech advancements enable new possibilities.
Absolutely. The positive market vibes and the institutional money create this environment where maybe more innovation and building can happen.
Right, but that regulatory uncertainty in key regions definitely remains a major factor, creating both hurdles and, maybe for some, opportunities.
And all that progress on interoperability and data, that's really laying the foundation for whatever comes next for a more integrated system.
Couldn't agree more.
So I guess the final thought for you listening is, when you look at all these moving parts, the market buzz, the institutional cash, the regulation game, the tech upgrades, which of these threads do you think will have the biggest impact down the road? On finance? On technology?
Yeah, which one is the most significant driver shaping the future?
Something to chew on, definitely. Well, thanks for diving deep with us again today.
My pleasure. Always
Yeah.
lots to unpack.